Good morning, good afternoon, good evening, folks. Michael Zuber, one rental at a time, back with Mr. Greg Dickerson. How you doing, sir?
Doing great, Michael. Good to see you.
Hey, man, you got me vibrating again in episode 1. We've already hit carve your own path in episode number 2. Episode number 3 is really going to be reminding people that bear markets often have teeth and claws, and it's not the person who jumps out early that often wins. So let's just kind of set this up because, again, as you said in video 1, generational wealth is often built in recession. So let's tell more people about that.
Yeah. So, the biggest thing that you got to think about is obviously risk management. We are not in a bull market anymore. The Fed has pivoted. The economy is shifting, and there's a lot of macro, headwinds out there that we are experiencing and need to be aware of. And there's even more coming that we don't even know about and haven't even talked about. So we're in a risk off environment. We are in a maximizing your risk management environment. And what is risk? Preservation of capital. And the unfortunate thing is we're coming from a multi-year cycle since 2008 and 9, since the Fed has started QE, and we've had, artificially low interest rates and all this, money pumped in the economy, especially the last couple of years. Everybody's conditioned from the narratives of Wall Street, who are money managers that make money moving your money and with assets under management. So they're going to put narratives out there to keep people pumping money into the markets. Buy the dip, right? So that's number one. Yeah. And bull market, always, bull market on constantly, so there's these things. Don't be left out, don't miss the trade, those types of things. And it'll never go below here, you'll never be able to buy, all these different things. This is your last chance to buy at this level. So these are all Wall Street narratives that have been put into the market because the Fed put has been there, and everybody has been counting on the Fed backstop. And now the narrative, the Wall Street narrative, is the Fed pivot. So, right. So everybody's talking about, oh, the Fed will pivot. They're not going to let it go. They're not going to let markets crash. They're not going to, they're going to pivot. They're going to reverse course. Well, they did in 2015. They did in 2018. So that's been historically what they've done. And the portfolio managers that are in the biggest distress right now are the ones saying the Fed's making a mistake. They're going to ruin the market. You need to reverse course. And that's the Kathy Woods, the world out there, anybody who's in FANG and tech and all that. Yeah. So that's a narrative that's come out of Wall Street. And the biggest problem is people feel like they have to do something because inflation's high. And that's another narrative. Your dollar's getting devalued. Inflation's high. You have to put it to work. You have to put money to work. The people that are saying that are the people that literally have to put money to work because they're money managers.
Some people do. Yeah.
Yeah. Pension funds, life funds, they have to earn because they're paying out. So they have to put money to work. They have to earn. The problem is now we're in a bear market. Now we're in a down market. And, the biggest mistake people make is feeling like they have to do something now and deploy their capital where they're going to miss out on the big move that's coming when the dust settles and we, return back to a bull market. So sometimes you got to take a step back. Yeah. Sometimes the best trade is no trade. Yes. And sometimes the best place to be is in cash because the dollar value is going up right now, with the way the market is, and wait for the dust to settle, for the bottom to get put in. Then you can jump back in and, catch some of those, return to bull market. And how do you know? Well, the Fed's going to tell you. Okay. Yeah, how do we know we're in a bear market? Because the Fed said so. They stopped, QE. They're raising rates, this Wednesday. So they said we are not in a bull market anymore. So until the Fed pivots and changes that narrative, you're not in a bull market anymore.
Yeah, it's really right. The Fed put the buy the dippers, the Kathy Woods of the world. I just want to say it again. Sometimes the best trade is no trade. Cash is not trash. All of these kind of sayings are from people that have to be fully invested, or they have money committed and they want the retail investor to follow them so they can be bailed out of a bad trade. I did some research this weekend because I'm sure you've already heard that April was the worst month for stocks since 2008. It's kind of all over the news this weekend. That bear market for the S&P was a 48% peak to trough fall. What people need to hear is that peak to trough fall took 15 months. We've been in this one for 2 months, maybe 10 weeks. And oh, by the way, what has the Fed done so far? A 1/4 point move. They're going to get to neutral and probably go above neutral, which means 3, 3.5, 4. Eventually, we could have at least another year of a Fed tightening cycle. Do you agree?
Yeah, absolutely. Again, all the Fed has done is say we are no longer in a bull market. The Fed has said, fasten your seatbelts. They haven't actually done anything yet. And, the market is like everybody saw it's priced in, it's priced in. And we've been saying on here for weeks, it's not priced in.
Not
It's
priced
starting
in.
to be, it's pricing in now.
Mhm.
So as we get to Wednesday, it will continue to price in based on what happens Wednesday, depending on how hawkish or dovish the Fed is. You might get a bounce, you might get, more downside, and then we'll continue on, because what we're pricing in are rate hikes and the potential of QT. What's not priced in is actual QT, more rate hikes, and the effects of the economy for the reason that they're doing what they're doing, which is, a potential recession and, stagflation and just contraction that we're in right now, and, escalation of war, all those types of things. None of that's priced in.
Right.
So those are the types of things you have to think about when I'm saying, that it's, max risk management, environment right now. And you really have to, it's not bearish, it's not anything like that.
Yeah,
It's just
yeah.
reality
Yep.
of where we're at. And that's where the biggest gains can be made, is understanding where you really are, preserving your capital to take advantage of the big moves when they come. And the Fed is going to tell you when they're going to come. That's all you got to do is watch the Fed. That's your bottom and your top indicator. What did they say back before the end of the year when they banned trading for everybody in Congress and the Fed and all that? Top.
Yeah, it was. And we actually have a video of you saying that. Guess where the top is? I'm like, wow, that's ballsy. It was right. It was almost the day it was the top.
The Fed's going to tell you when the bull market is on, when the bear market's on. They said it back in December. You don't trade anymore. The Fed, nobody, Congress, you can't trade stocks. That's the top.
Yeah,
they told them to get out.
Yeah.
And what's happened ever since, and they're going to signal when they pivot, if and when they pivot, if they can. That's a whole nother conversation.
Yeah.
And that's when, bull market back on.
There you go. And again, the last thing I want to talk about here is everybody wants to know the day or the week that everybody thinks it's going to be like it's a day or a week away. Again, the last one that kind of unraveled like this was 15 months, the Great Recession. The dot-com crash, where the NASDAQ went down 80%, was over 2 years. So again, this could take some time, folks. It's not going to be in May. It's going to be months and months. I'm trying to fight off a sneeze. Sorry.
That's okay. Anyway. Well, even in 2018. So let's go back to 2018 when the last time the Fed raised interest rates. So they started talking about it, in January of that year. Market dipped a little bit, came back up in October, and then the bottom was in December. So it was 3 months then, to the bottom when they actually raised rates the last time. And again, they haven't really done anything yet. The talk, goes back to, December, January is where all the talk started. And here we are, April, 4 months in. And we're at, I'm looking at charts while we're talking, we're at those critical levels where the Dow Jones is getting ready to take out, a major low, the last higher low, or lower low off of this turn. NASDAQ's already taken it out, working, in bear market territory. S&P is, just taking out the last low. So, all indications in the charts. And that's what gets me too, is there's people actually out there calling for new all-time highs in the markets. It's just, how's that going to happen without the Fed? Doesn't make any sense.
Exactly. Folks, if you need to be following Mr. Greg Dickerson, both his YouTube channel that is behind me, but also has an amazing website. What is it?
GregDickerson.com. That's where everything lives. Go check it out.
All right, buddy. Thank you very much for your time this week. It's been a lot of fun.